All right. So today I have the pleasure of having Matt Golliher on the show. Matt, thanks so much for taking the time to join me.
Good to be here. Thanks for having me.
Of course. Um, so I'd love to get started and start the show off wherever you think is relevant in terms of your Bitcoin journey. So I'd love if you could tell me a bit in terms of how you discovered Bitcoin and what that initial encounter was like.
I usually start my Bitcoin story in 2017 because, as best I can recall, that's when clients first started asking me about it. I'm a financial advisor here in Indiana. And that year, 2017, with the big price run up from, 1,000 to 20,000, Bitcoin for the first time, it was really in the mainstream financial news in a way that it hadn't been before. You saw the ICO boom with altcoins and the blockchain buzzwords just all over the place. So there was a lot of interest among the public in it. And that's the first time clients first started asking me, do you know much about this Bitcoin crypto thing? And I'm not proud of it, but at the time I told clients that Bitcoin was digital Beanie Babies. All the stuff we've heard before, a hype-fueled bubble, purely speculative, no actual or intrinsic value, not a suitable long-term store value or investment. And to give myself a little credit, I did actually try to look into it that year, but with everything going on in the non-Bitcoin crypto space, like I think crypto kitties on Ethereum were selling for hundreds of thousands of dollars. I could not see through all that crap to recognize that there was a bright orange signal amongst all the noise. And conceptually, I did what a lot of people do before they really do a deep dive into Bitcoin, and I conceptually lumped it in together with all the other stuff in the crypto universe. So that's what I told clients because at the time that was the best of my understanding of it. And then toward the end of that year into 2018, of course, the price crashed, 70 or 80%. And I interpreted that as me being correct. And I didn't pay a whole lot of attention to Bitcoin for the next couple of years. Clients stopped asking about it. The bubble had popped and the hype was over. And then I was previously at that time a financial advisor through a bank channel. But then at the end of 2019, beginning of 2020, started talking to the managing partner here at Vista Investment Partners named Brett Guiley about potentially joining the team here. And decided to do that beginning of 2020. And my first day here at Vista was actually March 23rd of 2020, which is the day that Indiana's governor announced shutdown for the pandemic. So looking back, I'd started a new job. We weren't having in-person client meetings. The world was falling apart. We were printing trillions of dollars, and something made me notice that Bitcoin wasn't dead yet. And I just got this idea in my head that if I'm going to continue dismissing this thing, I need to know that I'm right. I need to at least read some books about it or something like that. So I ordered the Bitcoin Standard by Safety and Amos, and before I was even done with that book, I realized I had overlooked something here. I really need to pay more attention to this. So I finished that book, then I read another, and then I couldn't stop reading and became obsessed, fell down the proverbial Bitcoin rabbit hole, and later that year had gotten to the point where, I'm about as sure as you can be about anything that this Bitcoin thing is for real. And in my mind, it solved the biggest problem in global finance in the last century. Someone actually figured out a solution to it. And as a financial advisor, my options were number one, change careers, or number two, figure out a way to incorporate Bitcoin into my advisory practice. And so I and the rest of the team embarked on that journey, and it took about 4 years. We ran into some brick walls with compliance, legal, technical, but finally we were able to solve the Rubik's Cube until last year, a little less than a year ago, we were able to launch a division of Vista Investment Partners called Orange Horizon Wealth. And the purpose of Orange Horizon is to provide Bitcoin-focused portfolio management, financial advice, and financial planning to Bitcoiners, usually Bitcoiners who also own traditional financial assets. That's typically who we can best help. And so for about the last year, that's been the focus now that we can do it.
Yeah. Well, I appreciate that background and interesting journey. And I think, well, one of the things that stood out to me there, so you first dismissed it, which I think is typical of a lot of people, not just yourself, especially if you're in the traditional financial world, let's say, if you're coming from that background. Um, there's two questions, but I think the first one that I want to get into is just in terms of your background. Why did you decide to go into a financial advisory position, and kind of what was your background in terms of before you even discovered Bitcoin, your financial background, let's say?
I went to Indiana University. That's where I got my bachelor's degree, and spent a lot of the time there not knowing what I wanted to do. But um, toward the later end of my tenure at IU, started taking more finance-oriented classes. I'd always been interested in economics. Like, for example, I read The Creature from Jekyll Island when I was 19 years old. That kind of radicalized me
Yeah.
around, what the problem was, and had read a lot of Austrian economics on my own time. Um, wasn't a big fan of the Keynesian-oriented economics classes I took. I actively disagreed with them. So that had ended up tailoring my focus when it was ready to find a job, and ended up finding one at a firm in Indianapolis. That's where I got licensed, and I was there for about 2 years, and I learned enough there to know I think I want to do this, so I continued on that track. But yeah, that's the big background, I guess, is my primary interests were economics, finance, and decided to turn that into a career. As far as I know, I can't remember being aware of Bitcoin in college, although I'm sure I had heard something about it. But it's a little frustrating given how ideologically primed I was to embrace it that it took me that long until 2020.
Yeah, I mean, if you're reading The Creature from Jekyll Island when you're 19, and then, favoring the Austrian economics over the Keynesian, I think that's the perfect primer to understanding and accepting Bitcoin. And you mentioned also when you were talking before, Bitcoin solved one of the biggest problems that there was. Could you elaborate a bit on what exactly you mean by that, and what problem Bitcoin solved?
Yeah, when I say the biggest problem in global finance, I mean the costless production of money,
Mm.
where, for millennia, gold arose as the preeminent monetary standard for one primary reason, which is that it was the commodity that humanity had discovered that was hardest to inflate the supply of. By hard, that means that it costs you something, and there is no way around that cost. So it's egalitarian, it's unforgeable, it's unfakeable. Anyone in the world, if they want, can attempt to expand the gold supply, but there is no way to do that without cost. And people will often say, gold's primary virtue is its scarcity, but I think that's inexact. There are other elements that are rarer than gold. And when you look at it in an absolute sense, gold is infinitely abundant in the universe. The constraining factor is how much it costs you to acquire the gold and whether its market value is worth you acquiring it. So gold's fundamental limitation, however, comes from the fact that it's a physical metal. And so at the turn of the 19th century, when telecommunication technologies like the telegraph and the telephone allowed us to remit payment information at the speed of light all over the world, that created a divergence in the speed of payments versus the speed of settlements. And there was no and still is no technological way for us to achieve final settlement of gold or any other physical metal at the same speed that we remit payment information. So, of course, that caused the global monetary system to evolve as a system of IOUs for gold on top of gold as the base layer. But going back to what I described as the fundamental problem of the costless inflation or production of money, it costs something to find and extract gold from the ground. It costs nothing to issue an IOU for gold. So what we observed is the predictable result where there were now many, many more times IOUs for gold as there was actual gold. And so then in the 20th century, that resulted in every central bank on earth, including the Federal Reserve, defaulting on its obligation to redeem gold-backed banknotes for actual gold. And since then, we've been living in a world of fiat currency for 54 years, where the money has no intrinsic tie to reality. It's made up. And that shifts economic power away from the productive class to a privileged elite that has the ability to print the thing that the rest of us have to spend our blood, sweat, time, and energy in order to earn. And you can get into how unjust that is, the economic distortion that creates. But from an individual perspective, if you have money, keeping that money is the biggest problem you have. If you're wealthy or want to become wealthy, preserving your purchasing power is the single biggest obstacle to doing that. And Bitcoin solved it. So I mentioned how, I didn't need convinced about the problem when I discovered Bitcoin. I was already convinced there. And that's why I say before I was even done with Saifedean's book, I remember I started sweating. I read it in a single Saturday. I read it in one sitting. I couldn't stop. And the conclusion I came to is just someone actually figured this out. And from that point, I could not pay attention to it.
Yeah. No, and you did a great job of describing what exactly the problem is and how Bitcoin solves it. I think, um, yeah, I mean, I'm trying because I think for people like yourself and people who, have understood and read, especially who have an economics background who understand, what the problem is, I think it's easy to see Bitcoin as a solution. I think maybe up until maybe the past few years, a lot of people, especially in developing parts of the world like the US and Europe, maybe haven't seen the problem as big as we do now, where, as you mentioned, one of the biggest problems with money, especially fiat currency, is maintaining its purchasing power and trying to find alternatives to essentially store your hard-earned wealth into something that will maintain purchasing power over time. And I'm curious for because you so well understood the problem and you knew that there needed to be a solution to solve that before you even met really got into Bitcoin. Since you're working as a financial advisor, what was kind of your outlook there? Because I can imagine you're in this predicament where your role is essentially to preserve your client's wealth, right? But not having maybe the ideal solution to do so. What was your mindset like at that time before discovering Bitcoin?
My mindset was the modern savings account is the S&P 500.
Hmm.
And the way that I educated clients about the stock market, especially new investors, is that in your financial life, you have to strike a balance between two types of risk. There's market volatility risk and currency debasement risk. And there is no way to avoid both of those things. There is no asset that you can hold that will preserve or appreciate in purchasing power that will do so without volatility. That really does not exist. So the best solution I could come up with was helping clients maintain a position of appreciable securities that I believed would keep up or ideally outpace the rate of monetary debasement or inflation. And part of that education that I went through with clients, even before discovering Bitcoin, is an exercise that I described as calculating your own inflation rate. And what I mean by that is oftentimes, even now, people will think of inflation as a conventional government-issued statistic like CPI or, the Consumer Price Index, so I would educate clients about how that's calculated, how the methodology behind how it's calculated has changed over the decades, and then just make the fairly obvious point once you think about it that if the price of the stuff that you buy or that you want to buy is going up 5 or 10% per year, do you really care what some hypothetical basket of goods is going up, published by the Bureau of Labor Statistics? Because I don't. If the CPI is 2%, but all the stuff I want to buy is going up 10%, then I need to plan my financial life with a hurdle rate or an inflation assumption rate of 10%. So that's the approach I took. That's the primary lens that I discussed this with to clients to try to, try to help them achieve a state of calm during market volatility where, The end of 2018 is a good example where fourth quarter of that year, the market went down 15%, something like that. It was a pretty bad quarter. And there were a lot of clients who were worried. And this is before I discovered Bitcoin, but that's how I explained it to them, that the price that you have to pay to preserve your purchasing power over the long term is you're going to suffer short-term volatility. And, you zoom out over 50 years, you try to show them and balance that out. But along with that, also, it's a matter of assigning certain dollars, certain jobs. So not 100% of your net worth is 100% long in the stock market. You want to have a well-funded emergency fund, and you want to have things in place so that ultimately you don't have to care that much what the market is doing this month or this year. You have other assets that aren't as subject to those fluctuations, and that's what's funding your near-term goals. So that's the approach I took before Bitcoin. Bitcoin has obviously transformed that quite a bit, but the base pillars haven't changed all that much. I just found a much better tool to help clients with it.
Yeah, and I really like that point of view as well. And I think what's really important also from where you just said is the inflation piece, because I do believe, like yourself, inflation, the way that government measures it is indeed CPI, which is an arbitrary basket of goods that they decide on, whatever. Um, but indeed, like you said, when you look at the cost of things, of assets that you actually want to buy, if you look at things like houses, if you look at things like even other assets, maybe like cars or other things that typically you save up to want to buy, those are not going up by 2%, right? Especially we've seen that in real estate and even things like the stock market, where the stock market has gone up consecutively over the years because people are putting more and more of their wealth in there to preserve it. When you first talk to people, because I think when you're trying to talk to people who maybe don't either have a financial advisor, don't come from a financial background, even concept like inflation may be difficult to understand. Concepts like why detaching money from something like a gold standard is bad. Why fiat currency can be manipulated. Like these concepts that as Bitcoiners are sometimes pretty fundamental once you start to read things like the Bitcoin standard. What would you say the average person who walks into your office, would you say they have an understanding of how these concepts and different things in our monetary system work? Or do you think most people are kind of operating on I don't want to call it ignorance, but are operating without the awareness of how these things actually interplay and function together?
That's changed some over my career. The type of client that I engaged with has shifted as I've progressed in my career. Where the typical client I work with today is already a Bitcoiner. So check that box off.
Yeah.
Since I came to Vista, the typical client that I've worked with who's not a Bitcoiner has tended to be a more experienced investor. Not that they have any sort of subject matter expertise, but they've been in the market a long time. They're somewhat attuned to it or interested in it, or they'll do some research, read about it. But I still have quite a few clients where their mindset is, I don't know anything about this stuff. We trust you guys. Just do what you think's best for us. And obviously we still try to do a very good job of taking their risk tolerance and evaluating their goals and making the strongest recommendation we can and explaining to them what it is they own and why they own it. But at the end of the day, there's a lot of clients that really don't come to us with much background, if any background at all, into what that means when you say inflation. And I would say for the average investor, if you take everyone into account, from the 65-year-old with $10 million to the 25-year-old with his first $5,000 to invest, most of them probably do not really have a good understanding of inflation, just beyond, prices kind of go up over time, but that's about it. And there's I've heard this before where it's, why is 2% the CPI target? Because that's about how much they can steal from you before you start noticing. And fortunately, in the US and other Western jurisdictions, even though CPI methodology is flawed, it hasn't been catastrophically noticeable, where even though the stuff that, a young person might want to buy, like a house or a car, um, or a ribeye steak, yeah, that's going up 5, 6, 7% per year, not 2%. But still, at the beginning of your career, typically, you're earning more money every year. Things are still getting better every year, especially right out of college. So even then it's just not that noticeable of a phenomenon to where people really lock into it as, this needs to be my investment objective. It's still pretty abstract at that point. I'd say that's probably the most common way to describe most investors.
Yeah. No, understood. And um, what I'd love to get into now is a bit. So, you first had clients asking about Bitcoin and probably cryptocurrency in 2017. Obviously, then we had the bear market. So I can understand that when the hype goes down, it also kind of gets dismissed a bit. But then in 2020, when you did started doing that deeper dive into Bitcoin and reading things like the Bitcoin Standard and really starting to understand it, um, I think especially kind of when it aligned with what you had previously understood through things like, reading Creature from Jekyll Island, Austrian economics, things like that. How did you then go about with this newfound knowledge? Like, what was that initial reaction like? How did you then go to your job or your firm and try to express this as potentially a feasible investment, right? Because I think a lot of traditional firms, I'm sure, when you walk in the room and you say, hey, I want to advise my clients to also buy Bitcoin, maybe nowadays it's less and less, because especially now we're seeing, even things like a Bitcoin strategic reserve in the US. But even in 2020, it was still a relatively obscure asset and not something that many financial advisors would promote. So, what was that like?
I was very lucky in the sense that the managing partner here, Brett Guiley, went down the Bitcoin rabbit hole with me. So I wasn't the crazy new young guy who's, preaching the virtues of this magic internet money and having to convince a bunch of more established financial advisors that they need to take a look at it. The guy who signs my paycheck, so to speak, he was reading those books right along with me, and we came to that conclusion really that same year. So the challenge was external to our immediate office, where in our office we now have 4 financial advisors and support staff, but we were part of another RIA, and we had a broker dealer affiliation, and then we had legal counsel, and then there's the custodians and when we first started doing just a Bitcoin education seminar, that was the first brick wall that I ran into, where the policy was you are not to talk about Bitcoin. If a client asks about it, you're to say no comment. And that wasn't my team, that was compliance. So when I say that our journey took, 3, 4 years, that's why, because we really had to fundamentally change just about every major aspect of the firm in terms of where it touches other partners and vendors in order to be able to educate about Bitcoin and offer Bitcoin the way that we wanted to. So we separated from the RIA we were part of, started our own here in Indiana. We switched broker dealers. We found professional liability insurance that covers Bitcoin advice. We hired an external compliance team that understands it and isn't going to tell us no for silly reasons because they're scared of it, among, a laundry list of 12 other different things. So that was the first approach, is just trying to solve that Rubik's Cube to where, if I want to have a Bitcoin seminar, I can do that. And there's a compliant channel where we can do everything the way that we need to. And, finding a Bitcoin custodian, that was a big part where we use Swan Advisor, in order to offer actual Bitcoin to clients. And then since the spot ETFs came out, we also use those in portfolios. So part of it was just the development of the market, making things available that hadn't been available before. But, 3, 4 years before that, we were laying the groundwork to be able to take advantage of that. And we were probably a little too early, but overall, I'm pretty happy with our timing. If we had launched Orange Horizon when I wanted to, we would have done it right before FTX collapsed and all that happened. So in hindsight, I'm thankful that it played out the way it did, even though it was frustrating at times.
Yeah, I can imagine. I mean, so Orange Horizon, when was it officially launched then? What year?
May of 2024.
Okay, yeah. Because yeah, I mean, I think now more and more, well, like you said, one, it's a combination of the market building offerings that are more and more compatible with things like financial advisory firms, having advisory platforms, but also I think things like SEC regulation with the ATF and things. I know that now we also have certain laws that were passed in the US where banks can start to custody Bitcoin as well. So all these things play to a more what's the right word here? A safer, cleaner regulatory environment for financial advisors to work in as well. Um, but I'm curious also from the client perspective, because I'm sure you have a pretty diverse group of clients. What are their reactions like? Is it more people coming to you asking about what Bitcoin is and how they can include it to their portfolio, or is it more you offering it as a solution and having to educate them on why they should invest in Bitcoin or why it's a good option for them to invest in Bitcoin?
Yeah. For our existing clients, we're still Vista investment partners. As far as what they see, none of that's changed. The big change has been we started educating them about Bitcoin once we could, doing seminars, webinars, and bringing it up in in-person client meetings. And the reaction there covers the spectrum. We have some clients that want nothing to do with it. And we don't want to jam it down anyone's throat because it is a volatile asset. And the worst thing I could do for an investor is convince them to throw a chunk of money into Bitcoin and then watch it get cut in half. They sell at a loss and say to themselves, I'm never touching that again. That is the worst thing I could do. So I don't push. I bring it up and, we'll continually bring it up with them. But we have some clients that are not interested and may never choose to own Bitcoin, and that's okay. We have other clients who have gotten orange pilled, and we've watched them start their own Bitcoin journey. And, they started reading all the books and listening to all the podcasts, and they're proactively reaching out to us of like, I think I want to buy more. Which account should I take from? Um, and then we also have, we have some new clients that first engage with us because they're curious about Bitcoin. That's been true for, the seminars and webinars we do. We open that up to more than just our existing clients. But for new clients, I would say the most common one is someone who's already a Bitcoiner and is looking for help from a financial advisor that understands Bitcoin. They're 65 years old with $3 million. Half of it's in Bitcoin and they're about to retire. That person wants help. That person wants a retirement plan. That person wants portfolio management, but they want it delivered from someone who's not going to panic at the fact that half their net worth's in Bitcoin. They want to have a real conversation with somebody around, is that too much? Is that not enough? How can I do what I want to do and still accomplish my long-term pottling goals? And that's really the target client that I think we're best able to help. But for existing clients, yeah, it covers the spectrum, anything you could imagine.
Yeah, I can imagine. And how do you, for new clients, because I think there's a lot of different ways to approach Bitcoin from a value proposition perspective, right? You mentioned the big problem that Bitcoin solves, which is having a form of money that's, that can't be manipulated in the sense that it can't just be arbitrarily printed more of. It's scarce, it's decentralized. Are there other avenues that you approach in terms of presenting the value proposition to your customers on how you present Bitcoin?
One that comes up pretty regularly, I would say, because there is still a lot of confusion around Bitcoin versus crypto. Um, from my view, that has improved somewhat, but I would say that is still the single biggest hurdle to an investor understanding Bitcoin is the crypto landscape. That was my biggest challenge in 2017. That's why that cost me 3 years. And I still see that tripping clients up. Um, so because of that, I spend a lot of time talking about proof of work consensus and what the actual innovation of Bitcoin is, which is the ability to enforce digital scarcity through the unfakeable expenditure of real world energy. That's what Satoshi discovered fundamentally, in my view. And that's why Bitcoin was a profound innovation. And that's why non-Bitcoin crypto tokens should properly be thought of as a different category. We can have a separate discussion around whether, they're worth investing in or, whatever the case is. But you have to start, I think, by making a category designation that they're not the same thing. Although the crypto industry has put an enormous amount of energy trying to make them seem like the same thing. And they've done a really good job at that, as evidenced by all the confusion that there is around retail investors. So describing how Bitcoin is a digital monetary asset that's scarcity is enforced by the unfakeable expenditure of real world energy, that's controlled by nobody, it's an asset without an issuer, and it can be sent without the use of trusted intermediaries. Non-Bitcoin crypto uninvented that innovation by reintroducing an issuer or a trusted intermediary, whether that's a corporation, a foundation, a DAO, whatever you want to say. There is someone with the unilateral authority to make non-compatible chain rollbacks. And so it is, in a very real sense, controlled. It's a company. And without getting into the debate of what is and is not an unregistered security, I think that is the lens you have to look at it through, because you are taking security risk when the asset is controlled by an identifiable entity. So that's one framework that I talk about a lot, because I think that's one of the biggest sources of confusion for investors.
Yeah, no, definitely. And I think the cryptocurrency market at large can be a big distraction for a lot of people. I think most people, right? Because a lot of these cryptocurrencies have multi-million-dollar marketing schemes and teams behind it, trying to push whatever their cryptocurrency is proclaiming to solve. And yeah, it can be very easy to be confused and to confuse the signal for the noise, which is Bitcoin. And that's why I think it's really good that, you're helping your customers around the education components. And especially, I think what I'd love to get into a bit more is the proof of work part of Bitcoin, because that's also something that, my podcast is also for beginners and for people who are trying to understand, like your clients. Okay, what is Bitcoin? Why should I invest in Bitcoin? Why is Bitcoin different than all the other ones? And obviously, the biggest thing is, like you mentioned, the proof of work, or one of the biggest things is proof of work, and tying the creation of Bitcoin to expending energy in the real world. And so, could you, for my listeners and even for maybe potential clients that are listening, for yourself, explain a bit more that concept of proof of work and why that's so important to Bitcoin?
Sure. And for any listeners who want a more detailed version of what I'm about to talk about, I highly recommend the book Inventing Bitcoin by Jan Pritzker. That book, it's about 90 pages long. You can read it in an afternoon, but it does a really, really good job for people who don't have a computer science background, of walking them step by step through what this thing is and how it works. Not by using analogies, but by actually educating what each step means and how they all fit together. So that's roughly what I'm going to summarize now, but that's a book I would recommend for anyone who wants to learn more. So, first step to think about what Bitcoin is it's a digital monetary ledger. And in that sense, it's no different than conventional money that we use today, where most US dollars do not exist in physical form. Only about 10% exist as coins or banknotes. The rest of it exists only as a digital entry in the computer of a trusted ledger keeper, which is a weird way of saying a bank. Mm-hmm. And so if I were to send you $100, unless I give you $100 bill, if I write you a check or send you a Zelle or a Venmo or any other sense that, a payment is made non-physically, the only sense in which I have actually paid you money is that a trusted ledger keeper will deduct 100 from my balance and credit 100 to your balance. And we rely on those trusted ledger keepers to keep track of who owns what. Bitcoin's the same way, except there is no trusted ledger keeper. Everyone who wants to can keep a copy of the ledger. Everyone who wants to can attempt to update the ledger with a block of new transactions, including the issuance of new Bitcoin. So that begs the question, and this was the problem that Bitcoin solved, is how do we, if anyone can update the Bitcoin ledger and everyone is trying to, then how do we decide whose update is valid and in what order those updates should occur in? And Satoshi's innovation was proof of work consensus, where essentially his answer, like Jan Pritzker described, is Bitcoin holds a lottery, where anyone can buy a lottery ticket, but you don't buy it from a trusted issuer. You buy it from the universe using the expenditure of energy. Because what Bitcoin miners are actually doing is they're taking a piece of information from the last block of transactions or block header. They're taking a random number and they're taking the new transactions they want to add, and they're running those three things through what's called a hash function. And it's the SHA-256 secure hash algorithm. But the important thing about a hash function is that it's a one-way function. Meaning for a given output, I can't calculate ahead of time what I need to put in to get a certain output. The only way to achieve a certain output or an output below a certain level is to guess a random value, add it to the stuff I want, run it through, and check to see if it qualifies. And, Bitcoin miners, they're often described as solving immensely complex financial problems. And I always have a little bit of a problem with that because that's not really what they're doing. They're solving the same problem trillions and trillions of times in order to try to get a qualifying output below a certain difficulty threshold. So the way that difficulty threshold is determined is you need to get an output that starts with a certain number of zeros. And in a hexadecimal string, if it starts with 1 0, you've got a 1 in 16 chance. If it starts with 2, you need to run that on average 16 squared times 3, 16 cubed, so on and so forth. So what all these miners are doing is they're running an enormous number of hash functions over and over and over again, switching that random number to change the output, called a nonce. And then the first one who gets an output that's below a certain difficulty threshold, they can hold that up to the world and announce, I did it. I found the next update to Bitcoin's ledger. And what makes that work is that it took an enormous amount of energy, not just from that participant, but from the entire network to produce that output. But everyone who wants to can trivially verify that that person did in fact win legitimately by running the same piece from the last block, random number, and new transactions that they did through the hash algorithm and verify it turns into the same output. So even though it may have taken quintillions of iterations across the globe to arrive at that number, anyone can check it with one. And that creates a world where anyone who wants to be honest and fair and adhere to the actual right update based on proof of work, based on energy expenditure, all they have to do is have their node or their Bitcoin software follow the chain of transactions with the most accumulated proof of work. And in doing that, you don't need to trust the other network participants because there is no way to fake the expenditure of energy. You could get lucky and generate a winning hash output with not that much energy, but that is pure luck. Overall, on average, what proof of work ensures is that you cannot update Bitcoin's ledger without the unfakeable expenditure of energy, which lends it the same immutable scarcity as gold and also allows that to be transmitted to other participants in a way that cannot be censored by others, unless someone were to accumulate, the entire or the majority of energy expenditure on the network. But that's what makes it censorship resistant, inflation resistant, digital hard money. So that's my summary. But again, Jan Pritzker in his book, Inventing Bitcoin, he goes through that in more granular detail.
But that's so very, very well explained. And I think I'm going to play devil's advocate for a second because I'm sure this is a question that you get a lot. Because I know that's something that's been talked a lot publicly about is because of Bitcoin's proof of work and the energy expenditure that it requires. a lot of people like to poke holes at that and say, yeah, but Bitcoin is wasting so much energy. You know, there's all this energy that's going into mining Bitcoin that could be used for X and X and X. Um, how do you combat that? And how do you also, I think if you would like to, I think what's also interesting is to talk maybe about a bit how proof of work also incentivizes renewable energy. But I'm
Mhm.
curious in general, because I assume you've probably gotten that question from your customers. How do you react to that?
Yeah, I explain that a few different ways. And by the way, I always like to make the point that the environmental concern around Bitcoin's energy usage, as far as I know, is not an organic environmentalist concern. That was funded propaganda by the crypto industry. I won't name any particular names, but that's the first point I try to make is that's not actually a real concern that environmentalists have. And then I try to attack a philosophical point, which is that the expenditure of energy is not a bad thing. It is a good thing. All of human flourishing is the result of us harnessing and more efficiently channeling larger amounts of energy. That is the course of human history, and it is a mistake philosophically and economically to identify the harnessing and channeling of energy as a bad thing because it presupposes that energy is a zero-sum game, that there's only this certain pie of energy, and if we're taking energy and spending it on this one thing, then that energy is not available for this other thing that I think is more valuable. And I'm not even arguing which is more valuable. That's beside the point. The point is that energy is infinitely abundant. Again, like gold, the question is whether the economic value of the energy that you harness is worth the trouble of extracting it. So that's what I try to attack first, is just that fundamental premise that is based on fake environmentalism. Um, and then I try to make the point, because there is in computer science efficiency, that's not nothing. That is in many aspects a critical component of a system, is, you know, its efficiency, its scalability, things like that. So there I try to attack the premise there of Bitcoin's purpose is not to be efficient. And I think that's obvious through an analogy where I could tell you that global militaries are inefficient because every nation state has militaries performing parallel functions next when that's stupid. We should just have every nation state outsource its military apparatus to a global police force. That would be far more efficient. What I just said is both true and very stupid because the point of each of those militaries is to secure their citizenry and secure access to resources and physical safety from other militaries. So, yeah, they could outsource that to a global police force, and that may be more efficient, but that also completely destroys the point of having a military in the first place. And that is what Bitcoin is. The point of Bitcoin is to issue a digital monetary protocol that no one can control and that no one can inflate beyond the parameters of the original issuance schedule. In order to do that, the goal is not to be efficient. The goal is to impose power costs on those who would wish to update the network. So Bitcoin's energy usage very much is a feature, not a bug. That was the innovation. We already have efficient digital monetary and payment networks. And the biggest problem with them is that they don't require any energy to update. So they're subject to capture from a privileged group of people that wield symbolic power, whether that's political or whatever else. Bitcoin replaces that with actual analog, unfakeable power, which makes it egalitarian, which makes it fair, which makes it all the other things that we like about Bitcoin. Um, I guess those are the two main ones. I think the third one you talked about is also very useful, but I try not to start with that one because if you get into that, until you've attacked the toxic pillars someone is coming at you, we could argue all day, you know, which uses more energy, Christmas lights or Bitcoin, and which one's more. But at the end of the day, that's irrelevant, I think, compared to those previous 2 points I made. But to your point, one of the most fascinating things about Bitcoin is that for the first time, we've created a location independent consumer of energy on the global energy market. So that is a good point to bring up to people because, again, the premise is, well, these Bitcoin miners are using all that energy, and I don't think Bitcoin's a valuable use of energy. We could be using that energy on something that I think is better, whatever that is. When in reality, the economics of Bitcoin mining demands that over time, miners seek out the lowest marginal cost energy sources in the world. So what we're already seeing is that I think the majority of energy used to mine Bitcoin is energy that would have otherwise been wasted or stranded. And that's only going to continue over time where, you know, your friendly neighborhood Bitcoin miner does not want to compete for your television Bitcoin during peak demand electricity hours. They don't want that electricity. They want the electricity they can negotiate with the power grid favorable prices because it otherwise wouldn't have been used. Or even better, they want to find a waterfall in the middle of nowhere with an internet connection and harness wasted hydroelectric power that has been doing nothing for anybody because the cost to get that energy to a consumer is higher than the value of the energy to that consumer. Well, now you don't need to worry about that. If you have an internet connection, you can convert analog real world power to electrical power and run hash functions and sell it to the Bitcoin network. So that's, I think, a deeper point where I truly believe Bitcoin will revolutionize the global energy industry before it revolutionizes the global monetary industry because in some ways it's just free money. And every person in the energy industry I talk to, I've noticed they are among the most inclined to be curious about Bitcoin. Even if they don't care about Bitcoin, their mindset is, wait, this energy that we were getting nothing for, we can get something for. Okay, yeah, I'm interested in that. A lot of them don't even care about Bitcoin. It's just a drop dead obvious innovation that didn't exist before Bitcoin. And it doesn't have a lot of the same political contention as currency, money, central banking, and things like that. So, yeah, that third point you made, I think, rounds it all out nicely, where the conclusion is Bitcoin's energy expenditure is the reason why it's an innovation. It's not a problem.
Yeah, it's fascinating, and again, and really well explained. And I think it's such a fascinating discussion too around proof of work and how well, one, the topic around, energy being important for civilization to thrive, but also the way that Bitcoin incentivizes renewable energy and the most cost efficient way to achieve that. Another thing, just to shift gears a bit quickly, because I think what's also interesting is because you're kind of in both worlds, right? You have the
Mhm.
traditional financial background, but also as your role as a financial advisor, you advise clients on traditional products. Um, Not from what you advise, but I'm curious more from a personal perspective, because I think a lot of Bitcoiners, myself included, to be honest, when you discover Bitcoin, it's a lot of times like an all or nothing thing, right? It's like, I just want to put as much of my money and energy into that as I can. And not to say that all the other stuff is not valuable, but once you truly understand Bitcoin, and especially the scarcity element around it, it seems, and it depends obviously on your risk appetite and a lot of parts of your own profile. But I'm curious for your perspective, how do you view Bitcoin in terms of a financial portfolio?
There are some investors I talk to who are 100% Bitcoin. And I'm somewhat unusual as an advisor where I don't tell them that's a bad idea.
Hmm.
As long as they understand what it is that they own, and as long as they're in a position to withstand the volatility of being invested like that and never become a forced seller of Bitcoin, typically with those investors, we have a great conversation and then we part ways as friends because I tell them, you don't really need us. That's the beauty of Bitcoin. Um, I would say, and that's why I describe our ideal client is Bitcoiners who also own traditional financial assets, because for someone who's already living on a Bitcoin standard, to be frank, there's just not a whole lot of value we can offer them.
Mm.
Um, where there's a few common reasons why a Bitcoiner, even someone who's very convicted about it, would choose to not be 100% Bitcoin. One of those reasons is their spouse is not as convinced as they are, and you have to invest based on the goals, risk tolerance, time horizon of your household, not just you or the other one if the other one's a Bitcoiner. So that's just a very practical limitation of if the other spouse is not comfortable having that high of a concentration, you have to adjust the portfolio accordingly. One reason is just black swan risk, where, this especially gets more prevalent as someone starts building their wealth, where, for a 25-year-old who's got 20 grand all in Bitcoin, sure, go for it. Go earn more money, keep stacking sats. And I think that's the healthy mindset. Going back to my hypothetical 65-year-old with $3 million, I've talked to a lot of investors where they were 100% Bitcoin, but now they're starting to get ready for retirement. And, there isn't any specific thing they're worried about with Bitcoin. It's just that unknown unknowns. The future's uncertain, and the probability of Bitcoin failing is not zero because nothing's zero. So the ideal situation is that someone owns enough Bitcoin that if it does what we think it's going to do, they're going to be in a very good place. But if Bitcoin does something other than what we think it's going to do, whatever that is, they're still able to retire in comfort and dignity and, hit their base level financial goals. That's the ideal situation for someone to be in. And that relates to, I'd say, the third most common reason why a Bitcoiner wouldn't want to be 100% Bitcoin is just practically they're unwilling or unable to withstand the volatility of being 100% Bitcoin. Where, someone retiring today with $3 million, even if Bitcoin continues doing what it has done, they're going to end up in a good place, but that means at some point they're going to watch their $3 million portfolio go down to 800,000. Mm-hmm. And they, in retirement, they're not willing to do that. So we have to create a portfolio that shields them from that in some form or fashion. But again, they want to have a real conversation about that with somebody. They don't want to walk into an advisor's office and the advisor say, you need to sell all the Bitcoin and go into this conventional portfolio. And you could play around with it a little on your own. This is the most important asset that they own in their mind. And they want financial advice from someone who agrees with that. So, I'd say that's how I approach it. That's how I look at it, is trying to strike that balance between ensuring an investor's success if Bitcoin succeeds, while also ensuring their success if Bitcoin takes longer to succeed or does something other than what we think it's going to do.
Yeah, very interesting. And I appreciate all the insights that you have brought to the show and everything that you've said. It's all super, super interesting and practical. I think also, especially for my listeners who, if you haven't really done a deep dive into Bitcoin, I think a lot of what we talked about here is super fundamental to understanding Bitcoin. And so my last question for you is, what advice, I think we're in a time period now where there are, maybe now it's died down a bit more the past month or two, but depending on where we go this year, likely there will be new Bitcoiners entering the space. There will always be new Bitcoiners entering the space. What advice do you have to anybody that is new to the space?
The one that I give to everybody is learn about Bitcoin, read a Bitcoin book. The Bitcoin Standard by Seyfedin Amos and Inventing Bitcoin by Jan Pritzker. Those are the first two that I recommend. Mm-hmm. And then go from there, because, I never recommend that someone buys Bitcoin before they know what it is, because in order to benefit from Bitcoin, you need to do more than buy it. You need to hold it. And for an asset that is as volatile as Bitcoin, you are probably not going to hold it for the long term if you don't understand what it is. So, for those, my goal is to induce enough curiosity in someone that they will proactively learn more about Bitcoin on their own, because that's really the only way that someone gets orange pilled. You can't orange pill someone against their will. I and many other Bitcoiners have learned that lesson the hard way, I think. So, for anyone who's interested in it, that's what I would suggest is just learn about it. Those two books I mentioned are a good place to start. Um, I'm a big fan of the Sailor series on the What Is Money show, Robert Breedlove's podcast. For those who are more inclined to listen to information versus read it, I think that's a great primer where Michael Saylor, the CEO of Strategy now, the chairman now. It's changed a lot the last 5 years, but he takes the listener through a journey of human technology from the Stone Age all the way up to Bitcoin, and that I think gives a very profound base level set of knowledge that you can choose to learn from there. But the other thing that I tell people is be cautious of crypto resources. Focus your time and energy on Bitcoin only resources, Bitcoin only companies, Bitcoin only books. After you've done that, go read about the other stuff. I'm not saying that people should put blinders on and, don't read about those sinful altcoins. No, you should challenge the narratives, challenge your assumptions, but don't start with that. Start with Bitcoin only educational resources. And then when you're ready, when you feel like you understand what it is, then as curiosity leads you, then you can go play around with all the other stuff that's out there.
Yeah, couldn't agree more. Very, very great and practical advice. So, Matt, I really appreciate the time that you had today. I learned a lot from this myself, and I'm sure my listeners will as well. So, thanks for all your insights. And where can my listeners find you, or get in touch with you, or just learn more about what it is that you're doing?
Yeah, one place is orangehorizonwealth.com. That's the website that has a way to reach out to us and the team if you want to schedule a conversation. I'm also on Twitter. It's at Matt Golliher, MattGolliher. If you message me on there, I'll reply back with my email address because per compliance reasons, that's how I have to communicate. But that's one way people can initially get in touch.
Awesome. I will link that all in the show notes for my listeners as well if they're interested. But yeah, thanks again, Matt, and I'm sure my listeners will really enjoy this conversation.
Well, thanks for having me. I had a good time.
Of course.